Hey guys, Bob Brennaman here. I'm a realtor in Charleston, South Carolina, and today we're going to sit down with a local insurance agent, Hannah Kalish, and discuss insurance questions that I get asked a lot. All right, guys, we are, I think, 12 years since we shot this. Originally, Hannah was Zimmerman, now you're Kalish, and we're going to sit back down today and just really kind of go over some questions I get asked a lot. I'm sure that Hannah gets asked a lot. And the goal in this is to help y'all who are watching this kind of understand, coastal insurance. So we're going to kind of start with, when I deal with people a lot of times, they just have massive concerns about coastal insurance. So, kind of go over things you feel like they need to know.
Sure. Well, for starters, I would say if they are relocating from another place, to really seek out a local agent to speak with that has the coastal insurance markets, that understands the difference in the coastal risk as opposed to living elsewhere. Right. There's typically, that due diligence period to be able to do that when purchasing a new home, and I would certainly put insurance at the top of that list of things to do. Check certain properties' flood zones, obviously, so that, understanding the difference in having homeowners insurance and flood insurance together to be adequately covered on that home that they want to purchase. Okay.
Talk to me about, as you were talking about flood insurance, I know there's some changes in flood zones and kind of laws and everything. Kind of just go over some of that to help us.
Sure. So flood insurance is a national program that is regulated by FEMA and the National Flood Insurance Program. They have changed their rating platform as of October of 2021. So the way in which they rated flood insurance prior to that time has drastically changed. We used to utilize really two components for flood insurance: the flood zone that it was in, and the height above the base flood elevation. So we used an elevation certificate to compute that rate for flood insurance. Now it has become lots of different rating variables that the National Flood Insurance Program looks at of a property. For instance, your rate is going to be based on distance to tidal water, what type of tidal water it is, how many stories your home is, what the foundation type is, what the full replacement cost of the home is, how many square feet the house is. The rate is not based on the flood zone anymore at all.
So are elevation certificates no longer needed?
They are not required. You do not have to have an elevation certificate to acquire flood insurance. However, they can still be helpful. They can still apply a credit to the rating if it is a favorable certificate.
So you were saying that they were using two different mechanisms to kind of come up with flood rates now, but if you have the elevation certificate, that could potentially get you a tweak for a lower rate.
Correct. That is correct. It's not I would not say it's a substantial credit, but it can help with the rate. It will never harm you to have an elevation certificate, but it could help with the rate. And to answer your question, no, they are not required.
Okay. And are they assumable and transferable
still? So policies are still assumable and transferable unless you are with a company where it's member only, like for instance, USAA. Yes. And we encourage and suggest folks to assume flood policies right now. And I can try to explain that. So when we write a new flood policy in the new program, you get the full rate of what it is today based on the new rating platform. If you assume a policy that was already in place prior to October of 2021, you're in what they are referring to as a glide path program. So you are feeling a rate increase over a 5-year period. For instance, if the new rate is $500 more than the homeowner that has the policy now, they're going to get a rate increase of $100 for the next 5 years. So you're not going to pay that full rate all at once. Does that make sense?
No, it does. And I
Yeah.
noticed with my flood insurance this year, I
Yeah.
think mine was like, it's been $250 a year for however long I owned the
Yeah.
house. And I was telling Becky that it went up by maybe $75
Sure.
this year.
Sure. And so it will continue to go up a little bit each year, but that's much easier to take than just the full rate increase. So we do encourage all new home buyers to try to assume that flood policy from the seller if possible.
Okay. How does private flood insurance compare to
Yeah.
FEMA flood insurance, and kind of talk about that a little bit?
Sure. Yeah. So private flood insurance has become very popular with the changes and the new Flood 2.0 rating program.
Why has it become?
So, well, one, we have private insurance companies that are getting into the business of writing flood insurance, where it used to be something they just didn't cover because it was handled by the federal government. So we have insurance companies that are providing it and offering it, and then their rates can be more favorable on a new policy with FEMA. Their rates can be lower. From a coverage standpoint, they are providing essentially the same coverage, the $250,000 on the building, $100,000 contents. But a big difference with the private flood policy is they will go above the $250,000. They will write your flood insurance for a higher amount than that.
Oh, so the federal government, even back years ago, they wouldn't. I'm trying to remember some clients I've had, and they wanted to get extra flood insurance beyond the $250. Even years ago, they were having to go get it privately because the federal government is always and continues to be just $250,000.
That's right. So historically, you would have to purchase yet another policy, an excess flood policy, through a private carrier. Now the private flood carrier will just write your flood insurance for the coverage amount that you would like to purchase on one policy.
So talk about, obviously, I know, and I always tell my clients this, V is in velocity, the VE is the worst zone to be in. Kind of I guess, talk about that as they run through the zones.
Yeah, sure. So FEMA now says that they do not rate based on the flood zone, A zone versus V zone. They just don't use the zones as one of the rating variables any longer.
All right, well.
However, they're still rating to that specific address, that the topography, the base flood elevation, all of those are still factors. So you're still going to find your higher rate in the VE flood zone. That's still going to be your highest rated flood zone.
And correct me if I'm wrong, if you're in a V zone, that's what I've been telling people, is that it affects your homeowner's insurance to be rated a little higher than it would be in an A or a C or an X?
Not necessarily rated higher. However, there are lots of homeowners carriers that it's an eligibility for them. So they would not want to insure a home in a VE flood zone.
Okay, so
Yeah.
so even though the federal government, like you're saying, doesn't really factor that in, they factor a lot of other things in it. If you're going to, with your homeowner's insurance.
Yeah, it's still a factor to get the insurance.
So it's it's continued good advice from my clients as I talk to them about flood zones is, V, again, explaining what you just explained to me, but letting them still understand that there's going to be some higher ratings as far as the homeowner's insurance, and they need to factor that in.
That is correct. Okay. Yes. The biggest thing in flood zones that I would like to point out is the X flood zones, where flood is optional. Right. You don't, have to purchase that flood policy. It used to be a flat rate for those particular zones. It was around $350 for a while through FEMA. It got up to about $550 a year. Now each home is rated to that specific property. So an X flood zone through FEMA can now cost you thousands of dollars. So most of our X flood zones are written through private policies that still cost about $600 a year.
Okay, because I know we got that one on Fairmont that you're going to be handling, and they're in an X zone.
Yes.
So they don't have to, again, if you're in an X zone, you don't have to carry flood insurance.
You don't.
Whether you have a loan or don't have a loan.
Correct.
Because the bank derives the fact that you have to carry flood insurance.
That's correct. Okay. Yes. Now we always suggest flood insurance for sure, and it's usually less expensive in the X flood zone, and it still is if you go through the private flood market.
And is C still the same way as far as
It is.
You don't have to carry flood insurance if you're in a C or an X zone?
That's correct. Yes, they're both what we call preferred risk areas. The likelihood of flooding is very low.
Okay. I mean, before I transition to other questions, are there some that you wanted to like go over that we were gonna?
I think we've covered it. That I just wanted to make sure we understood that existing policies, they have a longer period of time to feel the rate increase that FEMA has with the new program, and to continue to assume policies, if at all possible, from sellers, and to utilize the private flood market. Flood used to be something that we didn't shop because the rates were always the same. Yeah. You need to shop your flood insurance now.
That's really good.
You need to check with different companies to get different flood rates now.
So if you're going to go so the federal government's flood rates are the same. It doesn't matter if you buy them from whoever or you assume them, those types of things. But if you're going to do, well, I lost my train of thought. What were we talking about?
The private flood.
The private flood. Geez, what we're going to say. You go ahead.
So I would definitely just say to shop the flood insurance, because you may get the same rate from a FEMA carrier, but different local agents have multiple private flood insurance companies that are going to give you different rates, and you can find the most cost-effective, best policy.
I know what my question was. Was it like with homeowners insurance? I always tell them you need to get 3 different quotes because it makes a big difference. So to your point about shopping flood insurance, it really you need to shop that to make sure that.
You do. I would get 3 different flood insurance quotes as well.
Unless they're quoting you from the federal government.
Correct.
That's not going to change.
That's right.
But if you're getting private insurance, shopping flood insurance makes a lot of sense.
Yeah. So if they call an agent to get a flood insurance quote, I would encourage them to ask that agent for a FEMA flood quote and a private flood insurance carrier quote.
Okay, that's good information to share.
Yep.
Talk to me, and I know you and I just had this conversation about my homeowner's insurance.
Yeah.
And you actually you stole Geico was pretty upset. I think I've been with Geico 27 years, but you bundled my homeowners and car. So talk to me about what type, and this was our conversation you and I had, was what can you do to get your premium down?
So you just answered one of the biggest ones, is to bundle policies together, specifically homeowners and auto insurance. It also helps to add, if you have a boat or a golf cart or an umbrella policy, we do all personal lines can be bundled together. Can really save you substantially. 10-20% off of your homeowner's policy if you include the auto insurance as well. So if it's someone that's moving here to make this their primary residence, it's great to look at the whole insurance package together to get the most cost-effective premiums.
And I noticed with mine, I think you wrote me my car insurance through Progressive, and I think you wrote me through Occidental for my homeowner's insurance.
Correct.
So it doesn't necessarily mean that you have to bundle it with the same company, but bundling it with the same insurance agency, like Taylor Agency in your case.
That's right, and we refer to it as a companion policy credit as opposed to bundling with the same company. So that's kind of what our job is to find the best homeowners rate paired with the best auto insurance rate, and that doesn't always mean it's the same insurance company. But that is one way to really cut down on your insurance cost is bundling. Always a great idea to look at different deductible options, because that can save premium as well. A big thing that drives insurance premiums on the homeowners these days is age of roofs. That would also be something I would suggest during due diligence to make sure that home you're looking at, that the roof has been replaced in the last 10 or 15 years. Lots of credits are given for the newer the roof is on the home.
Really?
Yeah.
And I guess because some of that, at least in the coastal environment, there's more strapping that goes in when you put a new roof in, and there's the shingles are probably built to rate a little bit higher.
That's right.
In a lot of cases.
That's right. Most of the municipalities, town of Mount Pleasant or whichever one we're talking about here, you have to build the roof to current building code. The particular straps are used, the particular rated shingles are used, and so it mitigates losses a lot that way. So you're given a credit on your homeowner's policy for that. Just other things that can help are, and especially if you're looking at beach properties, hurricane impact glass or hurricane shutters are also big credits that are given on homeowners' policies. Anything that's going to mitigate a hurricane loss is going to help on the homeowner's insurance specifically.
Okay, that makes good sense.
Yeah.
Talk to me about earthquake insurance.
Yeah. So
without scaring everybody.
I know. We've had quite a few tremors in South Carolina this year. So we are on a fault line here. The Woodstock fault line is what it's referred to as, down through South Carolina. It is an option on the homeowner's policy. It's never included. Some folks are misunderstood about that, but it is an optional coverage that can be purchased. We would always suggest it to folks, but we see probably about 50% of folks purchase earthquake and the other 50 don't. It's never required by a mortgage, so it is really an extra coverage, if you will, on the homeowner's policy. I think the last earthquake that Charleston had was in the late 1800s. So, you could maybe argue that both ways.
Right, yes, I'm sure you could.
Yeah.
So, another question. What are some of the questions you get asked? I would say pick one or two that are like ones that you constantly, when people pick up the phone and get on the phone with you, what do they talk to you about?
Yeah, so my answer to that would be specifically with people relocating here, they often just assume that they will get a good rate from their homeowner's insurance company that they've had in New England, Chubb, for instance. And the coastal insurance carriers are very different than a lot of the rest of our nation. So, I'll just use Chubb as an example. Great carrier, we represent them, but they do not like to insure risks in Charleston County for the coastal exposure. So oftentimes people aren't as familiar with the names of our insurance companies because these insurance companies that right along the coast, it's their appetite, it's their niche market, it's what they do. And it may not be what a Chubb or a USAA or Nationwide does because they write all over the rest of the country.
Right, and that can sometimes, I know, scare people because I think we had somebody a couple months ago, you and I were working on, and they had USAA quoted, and it was crazy.
Right.
And then I was like, well, listen, you got to talk to somebody who works in coastal insurance, and always you give them your name, obviously.
Right.
And because it can be different if it's a niche.
That's right. That's right. And again, just such a good idea to talk to a local agent because we do know these companies. We know their financial ratings. We know if they're admitted to write business in the state of South Carolina. And we have claims experiences with them. So, I've been doing this for 16 plus years. So I've been through many claims with my clients and I know how the insurance companies react to them and what kind of service they provide.
Any other questions that people ask you that are like,
definitely another big one is we have different deductibles for hurricanes than we do for others. You have a percentage deductible for your hurricane, and that is often a question that people ask me because it's very different from where they're coming from.
Yeah, and I always tell people, and I have a high tolerance for risk. So I like to run, I always think, insurance, at least homeowners insurance, is for catastrophic events.
That's right.
And I think you and I probably over the years with you covering me, we've messed with and even for clients, we're trying to get a number to make sense.
Yeah.
And move around that deductible, that percentage, and that's something you advise if people if they're not risk averse.
Sure. Absolutely. We definitely do because it helps with the rate. And then also, if you're not going to file a claim unless it reaches a certain threshold, then that's really where your deductible comfort level should be.
And that definitely is going to save you some money. It's just depends, I guess, on a lot of variables. So what other variables, now that I'm talking about that, are there that are figured out? I always tell people, because they're like, well, what's the insurance going to be? I'm like, well, there's so many things that they factor in. What are some of the things that maybe people think about or maybe don't think about that they need to?
Yeah, so there's always difference in rates, whether it's a primary home, a secondary home, or a rental property. So that's a big rating factor. In addition to adjusting deductibles to different levels, we can also cater the personal property coverage to what it needs to be for that particular individual, and that helps with the ratings. For instance, if we're insuring a home for $1 million, the policy typically gives you 50% in personal property coverage, which would give you $500,000. Well, a lot of my clients say, well, I don't have $500,000 worth of furniture and so forth. So if we decrease that to where it needs to be for that person, it decreases the premium. Okay. Really just looking at that policy for what you personally need and catering it that way.
All right, y'all, let's wrap. Again, my name is Bob Brennaman with the Brennaman Group. If you like our videos, be sure to click in the right-hand corner of the screen to subscribe to our YouTube channel. If you want to talk to me about anything related to real estate, anything to do when you come on vacation, whatever, I love to talk about the area. You can reach me at 843-345-6074. You can check out our website for all of Charleston real estate, which is BrennamanGroup.com. Until next time, y'all.